What's up, guys? So we've got Tesla stock absolutely tanking today. Red background. We're going to look at why. There's a couple news stories developing. The main one is in downgrade from HSBC, citing some risks they see with Tesla. We'll take a look at that. Then we're going to look at some technicals as well as my covered call strategy I've been using with Tesla over the last couple months that has generated me some pretty good income. So let's take a look, starting with the news here. So as you can see, Tesla right now, as of around 3 p.m. is down over 6%, $14. Started the day just under 220, and it's all the way down to 207 already. And this is mainly coming off the back of this news story. Tesla has been hit with the reduced rating at HSBC. They are citing the timeline and cost of future products as a concern, as well as CEO Elon Musk being a single man or key risk to the company. It's funny how that only seems to come up when it's convenient for them and people want to take the stock here, but let's take a look. So HSBC analyst Michael Tyndall has a reduce or sell rating and $146 price target, implying a 33% drop in Tesla stock price. Stock's now down 17% in the past month. Now, Tyndall praised Tesla as an innovator in the space, one unburdened by legacy costs, holding down its expansion in the EV sector, which Tyndall wrote is definitely a growth sector. But while its reputation as an innovator is warranted, more than half of HSBC's model for future cash flows is based on initiatives that likely won't see profits until the end of the decade. Now, if we look at the chart here, yeah, there's definitely some truth to that. This is something I've been thinking about. A lot is baked into the pie here. There's no arguing with that. Because as of today, where is Tesla making their revenue? It's mostly automotive, a little bit of energy and storage. That number has been growing pretty drastically, which has been reassuring to see, at least the storage end, and then a little bit from other. But a lot of these things, we had that Morgan Stanley report on the Dojo supercomputer, how that was like a $500 billion opportunity. Fully autonomous vehicles, the Optimus humanoid robots. There's no telling when these things are really going to be producing revenue. So I think that is a fair point. All this is definitely baked in already. And we may not see, profits or substantial revenue from the things in the yellow here for years. I mean, that's definitely a fair point. We see considerable potential in Tesla's prospects and ideas, but we think the timeline is likely to be longer than the market and valuation is reflecting, hence the reduced rating. HSBC views Tesla differently than conventional car makers because it's already become a cost leader in the EV space, and with its growth ambitions, it will likely remain the leader for some time. While its growth aspirations of 20 million units produced by 2030 are lofty, questioning Tesla's credibility is problematic because it has generally done what it promises eventually, although they do say the 20 million looks too optimistic at this point. So a lot to unpack there. Yeah, it's clear Tesla's in the best position of any automaker. Rivian just reported, they're doing better, but they're still losing tens of thousands of dollars per car sold. And if the next 2 years or so we really get into a rough patch here with all this talk of recession is becoming a self-fulfilling prophecy, it feels like, right? If everyone is calling for it, it's either that or whatever. The point is, no matter what happens with the stocks here, if the market's rough, the economy's rough, Tesla's in the best position. No debt, making a profit on every vehicle they sell, and they're the only ones that can say that, right? Every pure play EV maker is losing tons of money on every EV they sell. The legacies like Ford and General Motors, they're also losing a ton on every EV they sell, and they're financing it really with their ICE internal combustion engine vehicles. So Tesla's in the best position. I mean, so, regardless of what happens here over the next year, 2 years, it could be bumpy ride for the stock price, but there's no question that they're going to come out, in the best position, right? They're in the best position, and I think that they're going to only increase that competitive position. And you're seeing that with a lot of, the decisions they've made here to go for market share over, profit margins and selling less vehicles. So the 20 million units, not so long ago, back in 2014, when Tesla said they would sell 500,000 cars by 2020, people laughed them out of the room. They said it's impossible. They said no way. History tends to repeat itself here. We'll see what happens. And, my whole thinking too with this number, they don't need to get to 20 million units, right? If they do, I mean, that's fantastic. They will be the biggest company in the world. But, if you run the numbers, if Tesla even only sells 10 million units, like they're bringing in an insane amount of revenue. So I think it's good that they have this, huge goal. This is what the company does. This is what they talk about in the Elon Musk biography, which I'm still working through. We'll have to make a video on that too soon. uh, by setting this 20 million goal, they're going to build more cars than they ever would have if they just said, like, General Motors, oh, we're going to be 50% electric, make a few million EVs by 2035. And then they're already cutting that, over at General Motors. They said they're going to be abandoning those plans. So again, there's no negative to having this number, this big audacious goal, right? It's going to lead to them making more cars than they ever would have. So they talk about how all these other things, the autonomous software, dojo, robotics, they're hard to model and they're little spreadsheets essentially. But I look at these things and I don't think we really can value them, because the way I'm looking at FSD and Optimus is, if this happens, they're the biggest company in the world, hands down. Like, there's no ceiling on the value it could create and what that would do to the company's valuation. So I feel like today, I'm trying to take a conservative approach where I'm not really even paying attention to that. Again, obviously the FSD is crucial to the company, but it is improving. But even without that, like, they're the best EV maker and they're starting to move into these other verticals. So, even without that, they're going to be in the best position, only an increasingly strong position, again, compared with their competitors. But so they're saying that these other avenues aren't going to produce cash flow streams until 2028 at the earliest. So I could see us have another period here where Tesla goes flat for a while. I mean, it was flat from a large part of the 2010s, right? And it really started to explode when we got to 2018, 2019, 2020. The stock went pretty vertical, but this happens. Everything's got to catch up, right? A lot is baked in. Again, the company's doing the best they ever have. Every quarter they're bringing in record revenue, record deliveries, but the stock price could go flat. It depends on the market we're in here. Tesla is facing other headwinds. They're under investigation over the FSD software, and you've just seen, with GM, Tesla's rival, they had to shut down their Cruise service across the country. They're recalling Cruise vehicles for safety updates. So that's definitely something. And then their final reason here is that Elon Musk is a risk for the company, not because of, his antics, but just he himself, right? They say his global fame has afforded the group a customer awareness that far outweighs the money it has spent on marketing and advertising, which is a tangible benefit. But there is a single man risk. And yeah, I mean, that's true. I think, like they go on to say here, Tesla has taken steps to show that there's a deep bench over at Tesla. They've got a lot of great people. It's not all about, Elon as a key man risk. Obviously, do I want Elon to stay at Tesla forever? Yes. Is the company better off with him? Obviously, absolutely. So, it's a risk, but I don't know that it's something you can really model for. It's the same, like, what are you going to do? You're going to value the company based on the key man risk of Elon Musk? Am I going to value the stock market on the risk of an asteroid hitting the Earth? It's just a little, I don't know. It's just interesting to me that these things become a problem when it's convenient here. I'm sure maybe someone out there is shorting the company too before this news. Not going to speculate. But now there are also some potential upsides here. They outline faster than expected EV transition globally. That's a possibility. That would obviously help Tesla. Continued market share growth for Tesla. I don't really see any way they don't continue to grow their market share. I mean, they've been doing it for years now, and nobody is really coming close still. Despite a lot of talking, nobody's really walking the walk, though. Tesla's still selling the most EVs by far. And a favorable regulatory environment for products like FSD. So maybe if the company can start to really educate people on how much safer, full self-driving potentially could be than humans who are becoming increasingly distracted, maybe you get a shift in, these regulatory agencies' stance where they see the value and the benefit to these products, that they could actually save lives. So a lot can happen there. Let's take a look at Tesla's chart here. So big, ugly candle today. I believe this is what they call a bearish engulfing candle. Yikes, just wiped out, the last 5 or 6 days here. And it looks like there was a little gap here. So broke through the 8 and 10-day moving averages here, those red and blue lines. It does seem like Tesla's next area of support is probably around the $200 mark. So we'll have to see if it'll hold up there. Currently at 207, so it's got a little bit more room. But, and it got up to 220 here where it hit the 200-day. So that's kind of acting as resistance. That happened back here as well. So we'll just have to see in the short term what's going to happen. I have started selling some covered calls on Tesla shares. So as you can see, over 2 months here is really when I started selling these covered calls to pay for my dog's fun surprise $5,000 surgery that he had to have, but he's doing well. He's doing really well, so can't complain. So I was trying to generate some extra income to cover that. And, I started off pretty conservatively. Again, these are all just, this is a small part of my overall Tesla position. So initially, I was just doing one contract, and I did a couple that were monthly or 2 weeks out here. And lately, I've kind of transitioned doing 3 or 4, maybe as much. I limited at 5 contracts that I have open at any given time. And I'm trying to shoot for making, $500 a week here. And last week was the first time I really had to adjust when the stock went up quite a bit. The whole market, if I go back here, went up quite a bit last week. Doesn't really look like it on this chart, but here, Tesla was up, $22 last week, over 10% as the rest of the market rallied too. So we'll see what happens here. I don't think I'm going to sell another one just yet. I have some expiring this Friday, as you can see here. Those look like they'll be good. And we'll see what happens. Maybe if we get some green here, I'll sell another for next week. But right now, I think I'm just going to wait it out, see what happens here. And then the other news I guess we got was that Biden wants UAW-style labor deal for all U.S. auto workers. He said on Thursday today, he wants all U.S. auto workers to get labor deals like the one the UAW union reached with the Detroit Big Three automakers after a more than 6-week strike. He said, I want this type of contract for all auto workers, and I have a feeling the UAW has a plan for that. Oh, dear God, let us hope not. Please leave Tesla alone. He also said Toyota Motor had no choice but to raise wages for U.S. hourly workers because of the UAW deal. So definitely a headwind there too. I'm sure that that'll be the next headline. You're going to see them throwing Tesla in that bucket. Hopefully they can fend it off because that would just be a disaster. So let me know what you guys think in the comments below. If you enjoyed the video, don't forget to like and subscribe. This is Vinny from the Investment Club, and I'll see you next time.